let's focus on the rent side. So Jacksonville rents are up about 1% in 2025. But the big takeaway here is that we are poised for significant rent growth in future years. I'm really excited to share this information with you.
Tell us more.
Well, in order to kind of talk about where we're going, we got to do a little recap of how we got here. And really, for the last 2 quarterly market updates, I've shared with you that Jacksonville has been a soft single-family rental market. And but you have to, in order to understand what's happening in the rental space, you have to break it down between single-family rents and multifamily or apartment rents because they are not exactly the same, and one can influence the other. What we saw from 2022, 2023 to 2024 is that single-family rents were on fire in 2022 and the years before, and they slowed down. What we saw in the multifamily space is that rents were actually really high in 2022, but not only did they slow down in the multifamily space, they declined. Took a dive.
Yeah.
And that is not normal.
Yeah.
Okay. So this just reinforces how different supply and demand actually act between 2 asset classes that are very similar.
Why is that, GC? If they're so similar, why is the swing so violent?
So this comes down to the fact that it takes a long time to solve the supply problem for single family homes, and you can solve the supply problem a lot quicker on the multifamily side. Because when you build a multifamily apartment complex, there might be 100 units in that apartment complex. One build might take a year to build it. You just added 100 units into that supply.
Yeah, very different to build 100 single family homes.
Very different.
Different
Different
amount of logistics, different amount of resources.
Exactly. So we are way undersupplied for single family homes. Today, we are.
Yep.
We started off being undersupplied for multifamily homes and apartments back in 2022. However, we are not anymore. We are oversupplied for multifamily.
It's interesting that we're undersupplied for multifamily for a brief period of time. It came back so quickly, and we've been undersupplied for single family homes for like 20 years, and we haven't been able to come back.
Exactly. One of the things that I continue to point out is one of the best things about single family rental properties is the way that you mitigate risk.
Yeah.
And just simply the length of time that it takes to bring 100 single family homes onto the market is one of the ways that protects you and mitigates risk.
Yeah, and these charts kind of like show what you're talking about, right? Like this ability to just really spike really, really quickly in 2021, 2023. Everybody got hot on the market. They rushed into multifamily, and then a couple of years later, multifamily dropped by 75%. Right?
Exactly. Combination that it took a long time for the market to absorb the glut of multifamily homes on the market, as well as interest rates being higher. So when people are making decisions where they want to put their dollars, well, it's a lot more costly to put it into an investment in an apartment complex today than it was because interest rates are higher. So what happened is the Jacksonville market, there was a 75% decrease in the number of starts just for multifamilies, which is wonderful because, the reason why multifamily does affect single family is that you do have a segment of the population that can rent either. Yeah. And so when you have a glut of multifamily, even though single family is different, it can weigh down and anchor down the pricing specifically because of the glut of multifamily properties. And that's what was happening.
I could see like a Venn diagram of like folks that definitely want multifamily, definitely want single family. And then there's somewhere in the middle of that price point, size of family, kind of like space needed that kind of like overlaps. And that one piece could overlap a little bit into single family, but not as much as that drastic thing that we saw in multifamily.
Exactly. We had to clear through that glut of multifamily, and that's really been the story of 2024 and 2025.
Well, seems like there's some good news here on the horizon.
Well, there is, yeah. The macro stats for the rental market in Jacksonville are very strong for single family, which makes sense because we moved through that glut of multifamily. And so we're looking at occupancy rates. And on the multifamily space, occupancy is improving as well. So again, this is showing that glut is being absorbed. And let's take a minute here to look at median household income. This is Jacksonville's median household income in 2020. It was $66,000. We now have a median income in 2025, $83,100. You were putting the percentages. What was the percentage growth on that? It was like
25% growth in median income in just 4 years.
This is one of the fastest growing median incomes in the entire country, which is wonderful for quality of life. It's wonderful for those of us who live in Jacksonville as rental property investors who are putting your money in this space. This is wonderful for you too, because we need to have the income support rent growth. and home price growth over time for you to maximize your return on investment. And that's what we're seeing here in
Yeah,
Jacksonville.
and that kind of answers this question, right? So there's somebody asking in the Q&A, and we've seen this downward trend in median rent in single family homes. Why is it growth expected in coming years, right? Like we're starting to paint this picture of there was that downward trend. Now this occupancy is back on multifamily. Single family home occupancy is still really, really, really good. And look at the what people can afford here locally, which will drive this competition for housing and things that are looking good here.
Yeah, and I did want to point out that every year rents have gone up in single family. So we have been weighted down by the glut of multifamily. Now that glut is absorbed, but we have continued to see rents grow year over year in Jacksonville, which is very normal. That happens most years here as well.
There you go. So let's just talk about your performance numbers here in this rental growth, and why you think it's such a good future.
Well, and we can kind of look at the macro and why things are changing on the macro side, which we just dove into. Now we have this opportunity because JWB manages over 5,600 homes here. We can take a deep dive into kind of a large micro set, right? It's micro data. It's one company, but
Micro Max.
Micro Max, yeah. It's coils, Micro Max, Venn diagrams, all of that good stuff, right? But so you can look at what's going on for JWB's internal metrics here, and because it is so many homes that we manage, we can
Significant population.
we get a significant population. Helps us feel good about understanding where the market is in overall. Guys, so these are the stats. We have increased our homes rented per month by 72% year over year. I'll tell you, we've been in business for almost 20 years now. It is very hard to grow any segment of our business by 72%. It was easy when we were in business for like 1 year or 2 years. We were like, oh, 72% growth. That sounds fun.
Yeah, you're
right?
a company with like 3 clients. You got one more client. It's a big deal. When you've got like thousands of clients and 6,000 homes, that's a really
hard to do 72% increase.
Yeah.
But that's what the market is delivering, and that's what your team internally here at JWB is making happen. And it is really exciting for our clients. We talked about occupancy growing. We've seen occupancy increase year over year. We've seen rent collection continue to go up year over year. We see lease renewals go up year over year. We see our eviction percentage be very low, and it's the same as what it was in 2024. So when you're seeing the macro look very good, and we understand why that's changing, and you also see this micro max looking very good here, it starts to deliver a lot of confidence for us here at JWB looking into the future, and it should deliver a lot of confidence for you too.
And somebody put this in the Q&A. May I suggest a point to add to what Gregg is mentioning? A factor that does affect is lousy property managers and lousy investors that have put money into properties only because money was free, bragging about how savvy they were investing. Hard to get along with free money for 15 years. JWB has a very strong selling point, not only for the advisory on where to invest, but how to properly manage the said investments. We desperately need thorough, diligent, meticulous, responsible investors and property managers. This is what you guys bring to the picture. It is a reality that the market is highly affected, not only because of the turmoil in the markets, but because this new class of investors and PMs that do not have a clue of what normal conditions are and normal to investing. The way that I put it, as I, move across the property management world and I teach the best practices of JWB as a gold standard, and the more I get to know the property management world, the more golden the standard looks to me, is proprietary data on performance is the number one thing to look for in a property manager, right? Like anybody can show you an Excel spreadsheet. Anybody can promise you these numbers. Can somebody tell you, I did not chat GPT these numbers. I derived these numbers based on what I've been able to do and things that I'm doing exactly just like you, right? Like these numbers to me is the proof in the pudding of like what leads to a great experience over time as property management to be able to consistently hit this in a market that we previously were calling soft.
That's right. And the cool thing is that I've been with you guys. My whole team has been with you guys for the last 6 months when the data was not so rosy.
Yeah.
When we had to lean in and be with you and say, hey guys, this is this is a soft rental market. This is how we're going to win in a soft rental market. The ability and the accountability that we need to show up with every single quarter and report this data to you, it makes us better. And it makes for a better investment for you. So thank you very much for that comment, by the way.
So as you see, are we still in the soft rental market?
I'm really excited to share with you that for JWB clients, the soft rental market that we talked about for the last 6 months is over. With data like we were just able to share from the macro sense and the micro sense, that soft rental market is over. But I also want to share this with you as well. Our advice on how to win is the same as what it was last quarter. Okay. And the reason is this: there is a lot going on in the world. There is a lot of change in the economy. Unfortunately, there's huge international conflicts.
Yeah.
Domestically,
Antagonistic, yeah.
domestically, there are things that are breaking our hearts. Right. Our job is to be a good steward of your money,
Mhm.
and we feel that being prudent now and delivering a wonderful client experience is important, and we don't need to rush to just kind of flip a switch on going very, very strong for rent growth right now, right? What we believe is that we are positioned very well for rent growth coming into, call it 2026. But right now, a slow and steady hand, prioritizing occupancy over vacancy is what we have been preaching. We really preach that all the times, but especially over the last 6 months. And that's the message that I want to share with you right now. Our team is continuing to prioritize occupancy over vacancy because we are just now leaving that soft rental market. And this is a time for us to continue to deliver on the gains that you guys have seen over the last 5 years, 10 years, 15 years. And then, of course, set you up for success as we go into 2026.
Makes sense, right? Like an average investor might see this. It's a soft rental market, time to get greedy. I think not your average investors understand that this is a long game. The number one thing that makes you cut the game short is a bad experience. If you prioritize the experience right now as the going is getting good, then when it's good, you have a really, really good time because you don't come in it with a bunch of baggage and trying to like chase past mistakes or anything like that. So like this idea of maintaining the experience high, betting on this thing, knowing that even better days are coming, and like staying in the game, right? That's the name of buy and hold. It's the hold.
100%,
Yeah.
right? Our job is to steer the ship. And for clients who have been investing for many, many years, you are playing with the house's money,
Yeah.
right? You have seen significant rent price appreciation and home price appreciation, right? And the bigger thing to do is to prepare you to be successful for a full market cycle. And we never kind of like just jump from one to the next. So we literally are analyzing where the market is right now. This is kind of what I would call tip of the spear information for
Tip of
you,
the spear.
right? I want to share this message. I want you to be excited about it. But part of the reason that you guys show up is to learn where things are going.
Yeah.
And we don't necessarily need to take action on rents immediately right now. It is really strong for where we see going forward, but continue to rely on your relationship with your JWB portfolio manager on your specific home. But no other way to say it other than it is really positive, and I'm excited that the soft rental market is over.
I like it, Greg. I like it a
I
lot.
like it a lot.